Welcome to HLG's Lunch and Learn series. I'm Halston Trabucco, and this week we're talking about banking and finance, and what better attorneys to have on the line than Brent Johnson and Steve Schain. Welcome, you guys. Thanks so much for being here.
Welcome, Halston. Thank you for having us.
Yeah, thanks, Halston. Really appreciate it.
Oh, I'm so excited to get going on this. But what I would love to hear is a little bit from Brent on what HLG does as a firm and the banking and finance practice in general. So I'm gonna pop in with comments along the way. For our audience out there, please submit comments in the bar. I will jump in and address the team that we have on right now. So take it away, Brent.
Awesome, thanks, Halston. I really appreciate it. And yeah, so thanks for joining in. We're obviously at Hoban Law Group. We're about just over 50 attorneys. We're probably one of the leading cannabis law firms in the country. We're 100% cannabis. We're a general business law firm. So we do anything from corporate transactional work, securities, intellectual property, obviously banking and finance, real estate, regulatory work. We have about 28 states covered, and we also have folks both in South America and in Europe. And so we are truly on the short list of the top global cannabis law firms. Me personally, I started my career back in Silicon Valley back in '99, worked a lot with startup companies, doing venture financings, mergers, acquisitions, securities work, public company work. I've been back in Denver since 2003. Been in and out of large law firms, large companies. I was associate general counsel of a large global franchise company. Also was general counsel of an investment firm. And then also for the last 3.5 years, I've been with Hoban Law Group, and I mostly manage the corporate practice group. So I do our corporate securities work, transactional work. I do lots of fund formation work, and just general kind of outside general counsel work. So with that, I'll pass it on to Steve, and he can give us his background.
Hey, thanks, Brent, and thanks, Halston. Hey, my name is Steve Schain. I'd like to tell you I'm the best in the world at what I do, but I don't have to. The National Law Journal did. I won the 2019 Financial Trailblazer Award by the National Law Journal, in my opinion, the top legal publication now. I co-head up the financial services group at the Hoban Law Group. And what do we do? Well, the firm, as Brent so eloquently said, we're primarily involved in legalized marijuana, industrial hemp, and a burgeoning practice in hallucinogens. And everything is based on money. Don't let the corporate group fool you. Sure, they think they're running the show, but it's actually the banks. And my background is I've been a lawyer for 31 plus years, primarily in financial services, litigation, representing banks from the biggest banks in the world, Washington Mutual, of blessed memory, Wells Fargo and JP Morgan Chase, to smaller community banks. I got kidnapped a couple of years ago to get involved in the cannabis industry because they have real issues in banking. Banking has many aspects to it, as we'll talk about: depository accounts, loans, and also other things in terms of cash management, cash transportation, merchant services, credit cards, all kinds of stuff like that. And I'd like to say that this was by fate, but it's not by fate. We come to you today, a very glorious day in my world, because yesterday the governor of California signed the Jones-Sawyer Cannabis Financial Institution Bill, rescinding all forms of limitations at the state level for banking in California. California is the 5th largest economy in the world. Half the marijuana, whether legally or illegally, is consumed in California. And I predict, I think Brent will agree on this, we'll talk in a moment, that a lot of production is heading towards California because favorable climate and size. So as goes California, goes the United States. This is an incredibly development, and it helps out what we do in the financial services group on two sides. Number one, for our cannabis-related clients, we help them get bank accounts. We help them keep bank accounts. One day, we have a longer chat. I can tell you about the panicky phone calls we've received on Friday afternoon. I just lost my bank account. I got to make payroll. What the heck am I going to do? And also, based on my background, I'm sort of a wolf in sheep's clothing here in cannabis. I'm really a banking lawyer. So I represent banks. We just closed pretty one today and help them design their programs. And banks only care about two things. Number one, profit. Number two, risk they can manage. So if you can get that, if you can sell those two propositions to a bank, better still, have it so they can sell it to their board. Well, then you have a marijuana program. Then they can do the deals that Brent's going to tell you about and does so eloquently. So we have a very jam-packed session for you, and we want to hear all your questions. There's no such thing as dumb questions. So with that, Brent's in charge. What's next?
First of all, Steve is our lead banking and finance attorney. As he just laid out, he's got tons of experience, both in and outside the cannabis space. He's represented the smallest and largest banks in the industry, both cannabis and up to banks that are doing $1 billion in business. So with that, I'm going to play kind of devil's advocate. First of all, can you lay out just the general landscape for folks that are looking for banking in the cannabis industry?
It's through the looking glass. That was the original title of an old book, Alice in Wonderland, and the looking glass is the mirror. The biggest question I have for my clients are, forget you're dealing with a bank. If you want a vendor, what would you do? And that's the real issue with marijuana-related businesses. Essentially, two divisions, as many of you know. There's plant touching and non-plant touching. The prohibitions on banking really regard non-plant touching businesses, but Brent and I and Halston have many friends in common who suffered terrible discrimination. I'm not getting a bank account because if you put their name into Google, cannabis comes next to it. So the real red zone is people who grow, process, sell, and transport marijuana, but also the ancillary industries, law firms, insurance companies, software, anybody out there who in any way receives money from marijuana has had difficulty in getting a bank account. So forgetting the law for a second, let's just assume you wanted this vendor to service your account. What do you do? So we have a 5-point plan. I can't reveal all of it, but we have a 5-point plan we tell clients to deal with in terms of getting financial services. Number one, define what you're doing. How much money are you going to have? How is the money coming in? How many wire transfers, ACH? Number two, define you. What do I mean by define you? What is your company? Are you a multi-state operator? Do you presently have bank accounts in other areas? Do you have reference? What materials can you have? Number three, define the future. Banks want to know what risk you present. In today's conversation with a prospect that's coming on, they have a client they said that was going to deposit X amount of money and have their bona fides. That client itself is huge. It's a multi-state operator, but who are you? Are you probably an applicant, which is very different? For reasons I'm happy to get into, it's the position of our law firm that if you don't have a license to grow, process, sell, transport, or possess marijuana, you don't fall under the Controlled Substance Act. Why? Well, you're not growing, processing, selling, or transport marijuana. Number four, define what the business plan is going to be. Where do you plan to work next? When you deal with financial services, which is separate from loans, which is separate from merchant services, what kind of risks do you impose? The big thing in dispensaries is they deal in cash. And is the cash going to be transported from East Jabip to the Khyber Pass, or is it across the street? How much cash is being transported? What size bills? What do you expect? What kind of things are you looking for? And number five, of course, is hire the Hoban Law Group. We are the best at what we do because we're the only ones who do what we do. Brent was being modest. There are a lot of firms who are very good in cannabis. There are, but we're better. And here's why. This is all we do. We literally get down and dirty with the clients. We understand their needs. Sometimes I feel we're as much as consultants as attorneys. So the phrase I use trying to sign up a client is, I can't make life pleasant, but I can make it less miserable because I understand what they're going through. I've been through their books. We understand what it's like to lose accounts. We understand which vendors they should never be dealing with. And the whole key is not just getting them a bank account, but getting a bank account that understands their needs, services their needs. One more thing, a bank account that's cheap. Banks have a surcharge on marijuana related businesses. If you're lucky enough to find a bank account, presently I have 54 banks that are openly providing financial services to marijuana related business in the United States. They want to have you and keep them. And sometimes they say, I'm sorry, but you're too much at risk. We're letting you go. And the key is to finding a way to maintain that relationship healthy to lead to the next level. If this bank gives you a bank account will this bank give you a mortgage loan so you can buy property? If they will give you a bank account, a mortgage loan, how about a loan secured by your accounts receivable? They should be understanding the marijuana-related business and helping you grow.
Awesome, Steve. So that's super high level. So I'm gonna pick on a number of those things really quick. First of all, I'm going to set up a dispensary. I need a bank account. I'm in California, or I'm in Colorado, or I'm in Illinois, or I'm in Pennsylvania. Who do I call? How do I do that? And I'm plant touching, so we're definitely within the CSA.
So you have a license?
Yes, I'll have a license.
You're a little shifty, Brent. Are you in legal or illegal marijuana?
So if I'm in the
well, I say that as a joke, but that's a problem. Brent gets my sense of humor.
I understand. My clients call me, and like with you, they call me every day. They say, I'm in Colorado, I'm in Nevada, I'm in Arizona, I'm in California. I need a bank account. And that could be a small dispensary. It could be an investment fund. How do I tackle that tactical issue?
Right. So I was kind of having a little fun there with Brent, but that's a very legitimate question. So the bellwether of our industry, our firm is centered. Our home office is in Denver, Colorado, which is a mecca for legalized marijuana. Last year did $1.6 billion. Still the biggest market in the country in legalized marijuana. In California, there's three different markets. There's the white market, the legalized market, the one we represent. There's the black market, which is completely illegal. Then there's the gray market. The gray market are people who are selling money, so you're selling marijuana legally through the front door, and out the back, they were actually selling it illegally because they couldn't balance their books or make a profit. So the first question is, and honestly, you're doing a favor to prospective clients, is asking them, are you clean as a whistle? We have to make sure that they're legitimate, their books are in order. Number two, we got to find out what their needs are. Brent said you're a dispensary. I assume you're being paid in cash. I assume you have a certain amount of drops. Where are you located? How far are you willing to travel? How are you willing to have the money transported? Little known fact, cash is not insured. So with actually Larry Michigan, Brent, this happened once. We had a client in Reno, Nevada, and we were touring their facility. Very, very nice. And I was in their vault, and I tripped on a stack of money. It was about $250,000, leading our partner, Larry Michigan, to say, Schain, you just fell ass backwards into $250,000. That $250,000 pile of money was not insured. It was not insured because you only receive casualty insurance of about 25 or 30 grand on cash. So how much money do they have? How are they insuring it? Are they willing to have a third party? We have a lot of friends in common, Brent, who are in charge of legally transporting money. Do they want the bank to pick it up? Another little known fact about money transmission, so this is a separate issue than banking, it's not illegal to move money between states. Say it again. If I am a dispensary in Nevada and I can't find a bank in Nevada, I can legally move the cash to a bank in California. So you might say, gee whiz, isn't that money laundering or money transmission? Well, no. If it's my money, I can do what I want with it. If it's $10 or $1 million, I can move across state lines. If I pay a service to move it, that might be money transmission. But we have many strategic partners who have a situation where you actually sign the money over to them. They take possession of it, they have insurance of it, then they move it to the bank. So that's a real option most people aren't aware of. In Nevada, as Brent mentioned, we had a real interesting thing in the financial services. Nevada was at the forefront of marijuana banking up until they got adult use. And once adult use marijuana came to Nevada, $44 million tourists in Las Vegas alone per year. We were very excited about that, but all the banks kicked out the marijuana depositors. Why? Well, marijuana is kind of funny in that it's 100% illegal under federal law. However, under the appropriations bill, federal resources cannot be used to prosecute marijuana offenses if it's medical marijuana. And so every bank was, kind of okay with that. Once adult use came in, that protection doesn't exist. And the bulk of depositors in Nevada is the gaming industry. And the gaming industry needs fluidity in their cash. So remember the gaming industry said, if you have any cannabis clients, we're pulling out. And so literally most Nevada businesses have to move their cash out of state. So again, depends where your dispensary is located. If you're a multi-state operator, what I like to do is make your life as easy as possible. So what if you had several banks who had branches in several states? That's very favorable. But again, it's to make everything as easy as possible and get the account and helping them prepare them, put their best foot forward and seem like an attractive prospect to the bank. Now, Brent's going to tell you a lot about transactional work, and some marijuana companies are even publicly traded, or as Brent said, multi-state operators. At the moment, rightly or wrongly, they're the most attractive depositors to banks. Why? Well, they have a history of being regulated, profitable, and if you're publicly traded, you have some form of disclosures, and that just helps out a bank. The two concerns are, number one, profit, number two, risk they can manage. And that's the concerns we have. Some people, especially in California, it's awfully hard to find a bank account for. And also part of the issues you face too are how to keep a bank account once you found it, how to make sure you do what's necessary of helping them out.
I'm going to jump in just really quick, and this is for you, Steve. If you have a multi-state operation, is there one bank that can work for all of your operations across the country?
If I understand the question correctly, no. So let's go back into it. The big banks, Chase, Wells Fargo, Bank of America, really don't want to provide financial services to marijuana-related businesses because they don't have to. They have profitable lines and the risk isn't worth it. Most banks often are in a couple states. There's one bank called Glacier Bank that happens to be in 7 states, which is probably the record of doing stuff. So if you're fortunate enough to be in those 7 states, maybe. But the odds are having that. Now, when we sort of do the dog and pony show and introduce our clients to banks, we try to tell them, here's what their needs are. Can you help us out? And how many states? But right now, more modest-sized banks are providing financial services. A bank with $1 billion or north, maybe between $1 billion and $5 billion, that's a lot of money to you and me, Halston, not to Brent, but to you and me, $1 to $5 billion is a lot. But the really big banks that are in every state won't touch this. And those kind of banks that are between 1 and 5 billion, I'd say are in 2 or 3 different states. And honestly, if you think about it, this is a fairly risky game, cannabis, not banking, and they have to be sort of edgy to want to try this. So there's fewer and fewer banks that do that. That answers the question.
In the question, I heard cultivation and I heard packaging and some other things. And so what is important is the delineation between plant touching and non-plant touching. So if you're cultivating, you're certainly touching the plant. If you're just providing packaging, that's an ancillary business. And so there's lots of plays that are ancillary. I mean, packaging, branding, there's lots of companies that are kind of effectively the picks and shovels of the industry that are not touching the plant. They don't need licenses and they should be able to get banking much easier. But certainly if you're cultivating or dispensing, it's definitely much harder to get banking.
Oh, I'd like to put a little spin on that. Actually there's a distinction between B2B and B2C. So let's go backwards on the supply chain. If you walk into any dispensary, you're generally using cash. There are alternate payment things. You can use what's called a point of sale system on your plastic, but generally they're dealing in cash. So you said in your original hypothetical, it's a dispensary, and the needs of a dispensary ultimately involve cash management, cash transportation, which is a pain in the neck for a bank. Conversely, if you're a grower, and let's get away from packaging for a second, be a processor, which we're going to define as somebody who infuses the product. Either it sucks out the THC or it takes the sucked out THC and infuses it in oils, in infused products, in the waxes, shatters, and concentrates. They're often B2B. So their issue might be more with wire transfers and ACH payments. Now, a lot of those guys are still paid in cash, but if I'm on the bank's point of view, a grower is a hell of a lot more attractive to me as a depositor than a standalone dispensary would be. To think of. Well, you said also, I agree with 100%, as I do most things you say. The ancillary businesses are people who provide software or other stuff like that are not plant touching. And honestly, when a bank hires the Hoban Law Group to say, gee whiz, we're thinking about taking on this client, what do you think the risk is? What should we do? Well, the risk is secondary at best. They're not touching the plant, but they may receive a check from Pablo Escobar or his like, or somebody like that. Not literally a criminal, but somebody who's involved with it. And the question is, what happens with that check? And some.
So say I'm a packaging company, right? So I'm not touching
Yep.
the plant, but you're right. I get money from all these folks that are touching the plant, and I often get paid in cash. How does that cash? I mean, as a business owner of an ancillary business, what should I be thinking about? What should I be concerned about? And how can I mitigate risk?
If you're accepting my through the mirror analogy, you have to look at the bank's point of view. So the bank has 3 points of view. They're called tiers: tier 1, tier 2, and tier 3. Tier 1 is somebody who touches the plant: growers, processors, sellers, transporters. Tier 2, maybe 1.5, would be commercial landlords who are sort of involved and could arguably accused of aiding and abetting the marijuana-related business. Apropos of nothing, we saw under the CARES package, the SBA loans, which is another big part of what we do, how we will guide loans and availability of that stuff. We saw that distinction being made in terms of the availability of certain loans in that. That's for another lunch and learn, Brent. Tier 2 is generally more what you're talking about, which is people who are not aiding and abetting, but they're doing something that's involved with it. So if I'm physically housing a grower dispensary, if I'm a landlord, it's one thing. If I'm Joe's box company and I'm selling you boxes you use to box off the product or something like that, or providing labels, I'm not really aiding and abetting, but I'm receiving checks in from somebody who is a tier 1 kind of person. And tier 3 would be something beneath that, being maybe the person who helps out the tier 2. I've never really been clear on what tier 3 is. Tier 3 usually is used when things don't fall in the auspices of being blackballed by banks. So what you're talking about primarily is tier 2. And the question is what the risk aversion the bank may have is, and it really depends on the bank. Each bank is different. So in our firm, we always have a 2-tiered analysis, which is we have to approach this both legally and operationally. Legally, here's the law. There's no question. It may be gray, but there's no question what it is. But operationally, what risk are you willing to take? Is it a reputational risk? Could you have an issue with your vendors and stuff like that too? What is the problem if you get a check? Also, things happen and things have to do a certain degree of reporting. So there's something called suspicious activity reports. Making this as painless as I can, we call it the waterfall. Top of the waterfall is the Controlled Substance Act, which says it's 100% illegal under federal law to grow, process, sell, and transport or possess marijuana, even with a state-issued license. And there's 34 states, the Commonwealth of Puerto Rico, Guam, and Marinette Islands and District of Columbia have some legalized marijuana program. Because stuff's illegal under that, by definition, it could be deemed to be a violation, what's called the Bank Secrecy Act, which is about money laundering. Here's where it gets a little murky. Most people know that any cash deposit that's north of $10,000, a currency transaction has to be filed. That's true, even if you're Brent Johnson's famous donut shop. However, if you're a marijuana-related business, no matter what, any kind of deposit you receive, you have to file what's called a suspicious activity report. And that means that you have to file with the Financial Crimes Enforcement Network a report, whether it's a general deposit, whether it's a general part that is suspicious, so any marijuana-related deposit, anyone that's suspicious, like something's kind of funky out there, or if you terminate a client, you're a bank, a depositor, you also have to finish called a termination SAR. So that record keeping gets kind of onerous. And it also puts you in the Financial Crimes Enforcement Network data banks. So a lot of banks have issues with that and doing that. It also makes it kind of extraordinary expensive. That's why having a bank account, we've seen people charge as much as $10,000 per month per account, just as the same depository services that every normal business has.
So a very tactical question. So I'm a packaging company. I'm ancillary. Somebody just paid me $50,000 for all the packaging that I'm providing. I'm sitting on that cash. What do I do with it? And I have a normal bank account just like any other non-cannabis business. Do I walk in the bank with 50 grand? How do
Just to be clear, this is a hypothetical, Brent. You're not reaching out to me, are you?
No.
Because I'm here for you. If you have $50,000, we enter a bit of a gray area here. But again, it sounds like a Pollyanna phrase, but I actually believe it. It really depends on your risk tolerance. So if you get $50,000 that's legally generated pursuant to a state licensed marijuana-related business, and you're sitting on the cash and it's declared, the question really becomes, where are you in the timeline in terms of where duties attach? And the second question is that what are the other reporting requirements? So if you get $50,000 again from Brent Johnson's Donut Shop or from a labeling or packaging company for marijuana, it's still $50,000. You can deposit it any way you want. Now, if you go to your bank, and again, I think people view banks poorly. They're vendors. They are our trusted advisors. They're here to make your life easier. They're here to help your business grow so you can deposit more money in the bank. So if you have $50,000, hopefully you have a relationship with a C-level executive. By the way, that's some of the value that we provide the Hoban Law Group is we know those guys. They like us. We like them. We help them out. And the important thing is when you pick up the phone and say, hey, Jim, here's my situation. I am a packager, and this company gave me $50,000. I want to help you with your SARS reporting. I want to help you with your currency transaction reporting, but I want to deposit this money. Is there any issue? And that should be easy enough to do. You are not committing fraud or anything, or you're not doing anything wrong. In the broadest sense, the depositor might arguably aiding and abetting a federal crime, except that's a law school exam kind of answer. I've never seen anybody do that. I've never seen anybody charged with that thing, although it could technically be made. So you should go to your bank, which hopefully you have a good relationship with, saying, how do I do this? I might say, look, we're not comfortable with this deposit, or what's the name? Can you give us the information on where you got it from? Do you have a copy of their license? Can you prove that they haven't had any violations? And or it may be a situation not avoiding the currency transaction reporting, which has to be, that's on the bank's level, but you make deposits in a series of deposits. Say, look, we don't like having that much cash on hand. Can you give us 15 and 20 over a month period? But talk to your bank. They're there to help you. And they're charging you. They're making interest
with just one question here. So, and I think that a lot of people would like a little bit more insight on this, but just a breakdown of the Safe Banking Act, Steve.
The Safe Banking Act. Okay, well, let's go further down the waterfall. So we started the Controlled Substance Act. The next wave, actually the next level, if you happen to go down, is called the Bank Secrecy Act to prevent money laundering, which is taking money from illegal enterprises and laundering them through legal ones. So the real concern in legalized marijuana was two areas. Number one, Michigan. Number two, California. And in California, in Michigan, the marijuana-related business licensing application wasn't unified. Each jurisdiction had their own way of doing that. And as a result, each one did it a bit differently. So that was a real concern. The Treasury Department, Financial Crimes Enforcement Network, in 2014 came out with something which is very important in my world called the FinCEN guidance. And the FinCEN guidance says that we're not saying selling marijuana is legal, but here's how you bank it. Now, the FinCEN guidance has about as much weight in law as the lunchroom instructions in the Hoban Law Group of washing our dishes. It really has no weight of law. It's just a guidance that's put out there. But we look at it as the rules of the Treasury Department if they were going to enforce anything, which brings us to the Safe Banking Act. One of the real issues that the banks have is when a bank has cash in their vault or any deposits, they have to be insured. To make this even more complicated, think of financial institutions. On one hand, you have banks. On the other, they have credit unions. They serve the same function, but a bank is often privately owned or publicly owned and insured by the FDIC. Credit unions are generally 501c3s for community, religious, or employment purposes. They were created for people who couldn't get normal depository accounts because their last name wasn't Rockefeller, and they're insured by CUNA, the Credit Union National Association. CUNA is pretty good generally with insuring marijuana deposits. The FDIC, not so much. They have mixed feelings. So what the Safe Banking Act does is it prevents deposit insurance from being withdrawn because a bank is taking on any kind of marijuana deposits. It prohibits a bank from penalizing or discouraging, discourages federal bank regulators from terminating, eliminating deposit insurance, from penalizing a bank for providing financial services to a marijuana-related businesses, for in any way encouraging, recommending a bank not to offer or downgrade financial services because they're a cannabis company, and taking adverse action on a cannabis legitimate business or its employee regarding real estate or equipment leased to a cannabis. So basically, it's kind of like an anti-discrimination law to make the banks more interested in providing financial services. It also directly brings in the FinCEN guidance, takes this thing and makes it officially the rule of what you have to do. The FinCEN guidance tells banks, before you can bring in a marijuana-related business, you have to do a host of due diligence, check them out, kick the tires. Brent and I have a mutual friend. I imagine Halston does too. Halston, you friendly with Sunday Seyfried?
Oh, absolutely.
Sunday is one of the is a wonderful storyteller and frankly a great pioneer in legalized marijuana banking. She probably has done more than anybody else, but she has great stories of what she had to go through to kick the tires of marijuana related business. But that's why she's probably the best in the game. And also, once you get a marijuana related business, what things you have to do to keep the thing going, SARS reporting and other affirmative duties. The Safe Banking Act brings that together. Now, although this is blasphemy in circles, I'm not a big fan of the Safe Banking Act. I think it's okay. It's not really going to change the game. First thing, it's not going to be passed this year, because if it ever had a chance, I think it was last year, unless some sort of miracle happens, I don't see it getting passed. And it just essentially allows more insurance and makes the FinCEN rules required. And that's going to help out banking. But again, the real issue is profitability. It's still too damn expensive for most banks to bank marijuana.
So it's great. Somebody watching with cash, they purchase their products. That's easy. What about payment processing solutions? I know there's tons of dispensaries that I can swipe my card. They have ATMs in there. There's all the, there's other kind of payment processing options. Kind of what's real and what's not?
I hate the word solutions more than you can imagine. Whenever someone tells me the word it's a solution, they are lying to me. I have a marriage. I don't have a marriage solution. There are no payment solutions. There are payments. It's that simple. So let's go through it. There's a lot of confusion about this sort of stuff. So merchant processing. Your plastic in your wallet has multiple functions. Everyone assumes it's a bank card, it's an ATM, it's this, that, and the other, but it actually serves a host of functions. So let's talk about them. The first function is a credit function, which means you're not paying with something with your money. If Brent Johnson has the most exquisite black card, he does. If you're ever with Brent, please let him pick up the check. The man is rolling in it. I've never seen money like that. But if you have a credit card, you have a credit function, and it kind of, you borrow money that you have to pay back to pay for something. It's perfectly fine. You pay interest on it. That's a credit card thing. The credit card companies decided they will not provide a credit card function for marijuana. Why? Well, a credit card company generally makes about 2% on every sale. The average marijuana sale is about $147.50. That means a credit card company is making $2 or $3 on every sale of marijuana, and they have to file all the SARS stuff. So they didn't assign a merchant code to marijuana because you're not allowed to use your credit function. Instead, if a dispensary, and Colorado certainly, across the country, definitely legitimate, but there are areas that are kind of fishy. I see most of them in LA, actually, quite honestly, the old trap shops. They will take a credit card function, but they will do something a little bit bogus. They will assign a merchant code to the marijuana sale, really meaning shampoo or meaning granola bars or something like that. But if they're doing something, they're breaking the law by doing a credit card function. And trust me, you don't want that on your system. So instead, most dispensary payments are used on what's called a payment processing system, or an ATM. And what does that mean? Well, two things. Using the same plastic, now you are using your money. You're not borrowing it from a credit card who you'll pay back. You're pulling money out of your bank account. It goes through. If we go with the typical sale of $147.50, what happens is, if you went to many of the fine dispensaries, and get that sale. Instead of being $147.50, the charge will be $152, and you'll swipe your credit card, Brent. They'll take the money out of your account in Bank of America, and then the payment processor will charge a fee for that $3. Then the $147.50 hopefully will go into the bank account of the dispensary. So you just paid a $3.50 surcharge, and also it came directly out of your account. And that's the way most of the sales work. Now, there are other things that are out there too. There's quasi voucher systems. Although I haven't looked at it lately, but it used to be in Washington State. They had we had a client for a while. I don't remember this point. They took a cryptocurrency, and one day we had a call, and they said, we're taking 24 different types of cryptocurrency to pay for cannabis, which was ludicrous. I mean, they can accept it if they want, but it's a pain in the neck for bookkeeping. And then you have the whole crazy conversion rate. Is it high? Is it low? How do you pay taxes on it? Real pain in the neck.
Got it.
Or you can pay cash.
Yeah. So last question on my dispensary example.
Go.
I need a line of credit, right? I'm going to grow my business. I'm going to hire some folks. I'm going to buy some inventory. Can I get that from my local bank or credit union? How do I fund my working capital?
Well, just by saying that, you officially enter my cool book, as we'll talk about it in your portion of this presentation. There's two terms of funding. There's debt and there's equity. And everybody in marijuana always wants to sell off a piece and not actually borrow money and pay interest. So already that's a good move. Can you get a line of credit? Probably not. I have a lot of people who say they do it, but you have to go through an onerous exam. You have to pay usurious interest rates. We can talk about this offline, but we had a client who I think they paid 125% interest on a loan they got from somebody, which was secured by something, which broke my heart. That's just ridiculous. Now, it was prorated over a 60-day period, but 125% interest? That's ludicrous. Awful. So generally not. The problem is this, which is that when you loan something, you filed something that are called UCCs, which secure the property. And a UCC says basically, I work on a lot of commercial loans for companies and stuff too. So when I file a UCC, if you're let's say you're a production facility, that means that I have a secured interest in the forklifts, in the computers, and all the machinery that's there. If something happens, I can send the sheriff in and take that stuff out. It's really mine to secure my loan. Well, in marijuana, you can't file a UCC with the county clerk's office in cannabis, because then the sheriff would be trafficking in marijuana. So the real issue in the lending point really isn't cannabis. That's an issue. The real issue is the lending criteria and what assets exist to secure the accounts receivable, and that's hard. That's a hard thing to do. So I know some people who do it. If somebody wants to reach out to me offline, I can connect you with them. But I would say be very careful in what you're doing here, because the rates are very high, and it's not a thing. But having said that, I have an issue, I guess, with the question, which is I don't think people are resourceful enough, in that if you're doing well in life, and let's say you have a home, you can get a home equity line of credit. You have other sources of stuff. If you don't go directly where the borrower is a marijuana-related business, but instead you go through a secondary thing, whether it's your house or secured by something else you have, your IRA, you can also get a loan too. Too many marijuana-related entrepreneurs won't use their personal assets to secure debt financing, which I think sometimes it's a good idea, but I think that it's kind of foolish, another thing, because one more time, having these loans is an essential business tool, and you need it.
Right. So one more question on just banking in general, and then we'll flip to raising capital and debt and equity and all that. So 2018 Farm Bill, hemp is now fully legal at the federal level. What are you seeing in terms of movement on folks that are like, I have a farm, I decide I'm going to switch from corn to hemp, and I need a bank account. Am I in a better position now because it's now fully federally legal? And can I get a bank account from Wells Fargo?
That's a multiple question. I learned as a young litigator not to fall into the trap of being posed a multiple. Yeah, you sort of can, but that's not really the issue. So in our world, it's not whether you can, it's is there anything stopping you from them? And there's enormous confusion. And God knows every attorney at the Hoban Law Group has presented at every presentation through the auspices of our Chief Business Development Officer, Halston, about speaking at a conference on the different types of what's marijuana, what's hemp. The issue in getting people in the hemp supply chain, where people who grow, process, or sell, brings in another issue that doesn't presently plague marijuana. Marijuana cannot be sold between the states. Marijuana state license, and it's against the law to move marijuana commercially, probably even personally, across state lines. And hemp, that's not so. Hemp is sold over the internet. Hemp is sold across the boards. And as we could talk about, and probably you guys had another lunch and learn, two kinds of hemp. There is fibrous hemp, which is very wonderful, applications, textile, animal feed, wonderful. And then there's oil-based hemp. For some reason, since Brent and I have been in this the last 4 or 5 years, one form of oil-based hemp is called the public fancy called CBD, and that has raised the ire of the Food and Drug Administration, which raises the ire of the banks. So moving back to the beginning of our analogy, if you are in the business of growing and processing hemp, I think unless the bank has a particular issue, I don't think it's hard to get a bank account. Maybe it's hard, but again, there's ways of doing it and going forward. But generally, I think that, I mean, it's always, some businesses just can't get bank accounts. But I think that it's a heck of a lot. The Farm Bill made it official. There are those who argue that a little known law firm called the Hoban Law Group made it official when we took and fought the DEA and had our groundbreaking decision in the Ninth Circuit. But Brent, you know me, I don't want to call attention to us or a law firm. But once the Farm Bill passed, it was official. So there's no problem in that regard. If you are selling product over the internet or even selling CBD over the counter, that's where it gets more complicated. I don't know why this is, but one of the 120 cannabinoids, cannabidiol, CBD, raises the ire of regulators, which raises the ire of banks. If you have that same oil, which is a melange of cannabinoids, whether it's broad spectrum or full spectrum, you're still good. But for some reason, if you have, as you said earlier, a dispensary or something that sells, they have an issue with CBD. Also, most of those sales happen over the internet, which means they have to use some form of merchant service processing, which similar to what we're talking about in the bank accounts, you got to get someone to do that. And some of those come on and offline. We have a list of approved vendors that we update every once in a while, insurance companies, banks, merchant processors. And the ones who I think these are always going to provide, come on and off. Things change. And so that's where the real bugaboo is, if that answers your question, Brent.
Yeah, no, that's great. So let's flip. So when I think of banking and finance, I think of commercial banking, right? I mean, the large banks, deposit accounts, credit card processing, lines of credit, et cetera. Most of that's a challenge to marijuana. And so I guess just for context, when I use the word cannabis, I mean hemp and marijuana. But mostly on the marijuana side, companies need capital. They need to run their business, they grow their business. And so and this kind of flips over to less of commercial banking and finance, but more of what actually happens in the industry. How are folks raising capital? What are the options to raise capital? What are the structures? And so I'm happy to keep asking you questions, Steve, or you can ask me questions. I guess first and foremost, I'll lay some groundwork. Most of the money that's flowing into the space is private capital. So we're talking about angel investors, we're talking about family offices, we're talking about private venture capital firms. There's not a whole lot of institutional money coming into the space. It's on the sidelines waiting. And so whether I'm a dispensary or a cultivator or a processor, what are my options for raising capital?
I know you're higher on the org chart being the CEO, but it seems like I'm doing all the talking. Just kidding. In terms of raising money, it can be two ways. It can be either debt versus equity, and the question is how you want to basically what you want to do. Now, we've seen a young nascent industry, every year in legalized marijuana is like 7 years in every other industry. And Brent and I have seen the chimes at midnight for a lot of our clients who had a bucket of cold water thrown on them, really learning the ins and outs of this. Some were successful, some were not. And the question is how you want to proceed. By my own inclination, I like debt financing, which is you borrow money from a bank and you have regular payments. I like that. It just makes more sense because you can operate. For some reason, startup marijuana companies seem to like equity better because they don't have to worry about paying monthly payments on a loan and dealing with banks if they're fortunate enough to get a bank to make a loan to them. The problem then comes into equity, and the people you're dealing in equity want a percentage of your business. Brent, if you can, tell us a little bit about it based on that. Again, if we're going to do like a Hatfields and the McCoy, I sort of don't like equity investment for startup businesses because the people seem like they take over the investors, and they're real captains of industry, of huge infighting, and problems happen in successive rounds. So I'd like to have a sense of what you think depending on where you are in the stage of business. So let me make it easy. Let's say we have two different companies. One is a multi-state operator, and the second is a starter loan. And let's create a new market. Nebraska is just marijuana, hopefully is coming to Nebraska soon. And we want to start and get in line, submit an application to grow, process, or sell marijuana, whether we're a multi-state operator or whether we're a standalone of Nebraska business people. And to make it even more specific, let's say with the application, we have to show $2 million, just show $2 million to be eligible to submit an application. What do you think are the best choices of funding, Brent?
Yeah, so let me talk in general about debt versus equity, and there's two perspectives, right? It's the company perspective, and then it's also the investor perspective. From the company perspective, it really just depends on the founders and what their long-term goals are. You know, when you talk about traditional venture capital startups, right? I mean, their idea is to start a business, grow it, in 5 to 7 years, do an exit either through an acquisition transaction or an IPO. And so they're definitely on the fast track to exit in 5 to 7 years. And in that case, equity often makes sense. I mean, you can issue equity. It doesn't, there's no debt, there's no cash payments, there's no interest that's accruing. And effectively, if you grow that business from 0 to, $30 million in 5 years and you exit, then those equity investors just get a slice of that and you get a bigger slice of that. And so in that context, that makes a lot of sense. If I'm the kind of guy that's going to start a business and I want to run this thing for the next 30 years and just generate revenue off the business, then giving up equity in that perspective doesn't make a whole lot of sense. Debt might be more favorable. The biggest challenge with debt, especially when you're growing a company, is if that debt is structured in a way that requires payments. If you got to make monthly or quarterly payments and you're in startup mode and you're trying to turn every dollar back into the business, sometimes those debt payments can be onerous. Also, sometimes the terms can be onerous. I mean, to your example earlier, the super high interest rates. So it largely depends on the founders and what their goals are long term. If you have a business that you want to kind of grow organically and over time you can make those payments, and then just kind of keep growing that business, that makes a lot of sense. If you're going to follow the kind of the venture capital route, typically equity is involved. That said, it also plays into the stage of the company, right? When you first start a company, typically the founders putting money in, you got family and friends that are coming in with cash. So that kind of gets you started, all right? And then it's like, well, I need more money. And so where do you go from there? And that's when you start to look at angel investors and family offices and high net worth individuals. And those can be either debt or equity. It just kind of depends what suits both the company and the investor. There's also, I'll call it a hybrid. I mean, it's primarily debt, but it also converts into equity, but convertible debt. And the whole issue with convertible debt is, you're going to give me a loan. Typically, there aren't any coupon payments or monthly payments or quarterly payments. Sometimes they accrue interest, sometimes they don't. But the idea is that convertible debt is a loan in the short term, but at some point in the future, it converts to equity. And so from the company perspective, it's effectively bridge financing. So it's a tier in the capital structure of a company. From the investor side, it really just depends on what the investor is looking for. I mean, if you're a VC investor, it's all about putting money into a company, and hopefully in 5 or 7 years, that company sells or goes public, and you can cash out that way. There's a lot of other folks. I'm working on a very large debt fund right now, and they just want to lend. They want to do 3-year loans, 10 to 12% coupon. They want to get their quarterly payments, and they want to send that back to investors. And so a lot of it is matching what the company's goals are with the right investors in terms of investor focus and investor strategy.
Well, you said, I think it's critical in the perspective, Brent, in that what are you building here? Are you building something within 60 months to 8 years you want to get rid of, or is it something you want over a period of time? Are you looking to build something that you're going to build out yourself, that you want to say, okay, we're going to start in Nebraska and then we're going to go here and build out, or is it going to build a certain point and sell? There's other intangibles too. When the biggest issue in marijuana related business in terms of borrowing, to me, in terms of the valuation of the marijuana related business, where they are and how you put a value on them. And one of the things I look at too, and again, we're from very different perspectives. You're a venture capital guy, I'm a financial services guy, but I like people who have a history of paying loans because it just shows that they're good, solid business people. Now, the weird thing about legalized marijuana is I had a call earlier with an entity that's an applicant in New Jersey, and they've raised a great deal of money, but the New Jersey processes, they submitted their application 14 months ago. New Jersey system got shut down by a lawsuit, but these people contributed all this money, and they're like, gee whiz, what's going on? What are we doing? At the same time, they have leases on commercial properties they have to pay off monthly, and they're like, and now they've gone, they don't even know if they're getting a license. So there's a set of variables. But how do you position a company in terms of setting their valuations for getting the most favorable terms in financing, whether it's venture or any other form of equity financing?
Yeah, so I mean, when you talk about valuation, it matters in some contexts and doesn't matter in other contexts. If I'm just looking for working capital loan, if someone's going to loan me $500,000 and I'm going to pay the payments. Typically, those loans are the investors are more focused on what are your revenues, what are your what assets do you have to back that. In fact, you brought that up earlier. One of the biggest challenges in the marijuana industry is that it's hard to secure marijuana products and assets as collateral to these loans, and so we have to be creative. We have to look at equipment, real estate, other intellectual property, other forms of assets that we can secure those loans because. More often than not, you can't secure a bunch of plants as collateral to your loan. Right? So on the flat, on the debt side, that's those are the issues. On the equity side, it's really just again for me, it's more of the exit, right? I mean, if I'm an equity investor and I'm putting money into your company, I can guarantee you from day one, I'm thinking about how I'm going to get my money out and hopefully what it's going to look like when it comes back out. And that's more of a longer term play. And from the company standpoint, I mean, a lot of folks say, hey, I don't want to give up 20% of my company for X million dollars. But they forget the fact that, say it's 20%, right? I mean, if it grows to $50 million, 80% of $50 million is a big number. And giving up 20% early on to get to that number is, I mean, it's kind of a no brainer. So when you talk about valuation and the traditional debt scenario doesn't apply. It does start to apply in a convertible debt situation because the debt that's convertible into future equity is often those terms are based on what the estimated future valuation of that company will be at some point in time. And certainly without a doubt, if it's a full-on equity investment, valuation is key, and valuations are tough. It's hard to get those kind of dialed in. Obviously, in the marijuana industry, there's tons of extra risks, and so the valuations can be kind of challenged in that respect.
One of the advantages of our firm is we, believe it or not, have a very mature perspective on legalized marijuana because we've been doing it probably longer than anybody. Again, every year in legalized marijuana is like 7 years in every other industry. So right now we find ourselves sitting on a lot of what we call business divorces, where there's successful marijuana businesses where the partners are now fighting over how successful I'm entitled to this, you said that. And one of the issues that make me nervous in the inception, not on the exit, is the whole notion of valuation, because sometimes companies say, gee whiz, we hit certain benchmarks, you are getting 2% sweat equity for doing this, and then they have a very favorable valuation for investment purposes. Then one of the people say, okay, I want out now. By the way, you valued our company at $10 million last week, so I guess I'm entitled to $1 million. See ya. I'm very nervous about valuations and where they play into it and how you assess the company and what happens, because you and I have had this conversation before that we said that 80% of businesses fail. I'm more scared by the businesses that are successful, because failure is an orphan, success has has many fathers. And I'm always worried, and we're worried, I think, at the firm about making sure that everything works together, that this raise or what you're doing now in the big picture. And also I've heard you talk about an entity called Mazzucchelli, which you call capital cadence. And in terms of of what you have on your balance sheet, this is well above my pay grade. Perhaps you can tackle it, but I've never understood. A lot of investors have an issue whether you have money sitting on your balance sheet that you borrowed and you're not doing anything with. Is that true? And what's an approach towards dealing with that?
Yeah, I mean, if you get into balance sheets and what's on there, I mean, that's a whole other, that could be a whole other hour of conversation. One thing I do want to touch on, in fact, we just had our corporate practice group call yesterday, and it's still amazing the number of deals that go down without any documentation. And so to your example about the minority investor that put money in, and then there's a certain valuation, and he's like, well, now you owe me $1 million. That's primarily, there's two things. One, either it wasn't documented or wasn't documented properly. And I guess that's a pitch for Hoban, right? I mean, get your attorneys involved early, get your accountants involved early. If you need some other professionals to help with evaluation, because it's not just about what's happening today, but what's going to happen in 2 years and 3 years and 5 years, and how all those pieces pay out. Because we're actually in the middle of a couple litigation matters that involve that exact issue, is that things weren't documented appropriately. Fast forward 3 years down the road, things aren't working out. And everybody's pointing fingers. And so it's super important to bring all your professionals in early to make sure things are right at the get-go.
I could not agree more with what you said. The scariest thing I hear is we're a very eager, and to be a lot of people who are standalones in marijuana are incredibly brave entrepreneurs, risk averse, very admirable people who seem to think term sheets have a magical quality. Someone said, we sent out a term sheet this, term sheet that. The scariest thing you can do is make representations about security. That makes us, or at least me, I'm not a securities attorney, you certainly are, but it always makes me feel nervous to say, we brought in money, we're giving pieces of the company away. There's such a critical need for that to be properly documented. And I don't know, certainly the first couple times you're on it, the clients sufficiently appreciate that. I think sometimes people think, gee whiz, you're just dotting the I's and crossing your T's, which you're not. You're preventing huge, massive lawsuits down and complying with rather complex and important securities law. So I could not agree more that having proper subscription agreements for private placements, everything else that you guys do could not be more critical. It's funny because marijuana-related business will sit around and argue for 9 hours over a logo or the name, green, wellness, rush, healthful, blah, blah, blah. And you're like, oh, for God's sake, please bring in a securities lawyer and accountant. That's what you really need right now.
Right.
Guys, we have a couple minutes left, and I'm going to jump in here. So, Brent, if you want to do any closing remarks, that would be fabulous. But it's been a wonderful hour, you guys.
Yeah, thank you, Halston. Like I said, this is primarily about banking and financing. Steve's our go-to guy there. Certainly, a lot of that kind of ripples over into the corporate practice group with regard to clients that need lines of credit, they need debt financing, they need equity financing. We structure all those deals. We have a large investor network, and so we can certainly help you get all your ducks in a row and introduce you to the right people to execute on your business plan.
Well, that's it, folks. So tune in next week. We're going to do HLG Global. We'll have Darren Kathleen and Luis Armendariz on the line for our next HLG Lunch and Learn every Thursday from 12 to 1 Mountain Standard Time. Thanks for being a part of this.
We don't get lunch.
Thanks, guys.
Yeah.